Hello, citizens! Today I'm going to talk about the history of trade in Star Citizen, where it is now, and how it got there. A lot of the information here will be presented as narration with numbers, so the actual video portion will have little to do with what's going on. This probably could have been a podcast, but I don't know how to do those, so you get a video. Now, before we get started, I do want to get a couple of disclaimers out of the way. One, while some of the information presented in this video is cited from sources such as SC Trade Tools and Galog, none of this information has been verified by CIG themselves. I've done my best to validate the information I have, and I do trust my sources. But, please be aware that I may be wrong about some things. I doubt it though. Secondly, parts of this video may contain opinion, which can be wrong and is subjective, especially when that opinion is on the internet. So if I state an opinion, please take it with a heavy grain of salt or salt alternative. And thirdly, as much as I hate saying it, Star Citizen is currently in alpha, with all portions of the game subject to change. This includes trading. With that out of the way, let's begin. The trouble with trading. In the current Star Citizen patch 3.14, trading is one of the worst possible ways to make money, with the highest investment risk and the lowest payout. To understand how it became the debacle that it is today, we need to take a look at the history of trade. I'll try to keep the synopsis brief. In patch 3.5 and previous, trade was not dynamic. Despite the patch notes for 3.0 specifying CIG's first attempt at a dynamic economy, things were pretty flat across the board. All prices were locked at their base amounts, and all stock and demand fully refreshed every 2 minutes. So, if a location had 180 SCU of Agresium and you bought it all, you only had to wait 2 minutes before it would refill. While this was excellent for making money, there was no push and pull to the economy. This was also during the time known as the Jumptown Wars. With increased server stability coming online, especially during the 3.4 patch, traders with large ships such as the Caterpillar were discovering that they could make just as much money hauling legal cargo than they could moving Widow, with a slightly smaller chance of being blown up. While legal cargo had a smaller profit margin than Widow, this was mitigated somewhat by the bulk purchases landing locations would make. As a personal anecdote, several friends and myself would pilot 4 to 5 Caterpillars of Agresium or medical supplies at a time, bringing in ridiculous amounts of profit with a massively high risk to the tune of about 5 million credits. However, due to bulk buying, we could make more profit this way than we could moving a Caterpillar full of Widow, if we could manage to get it off the ground. Now, patches 3.5.1 and 3.6 introduce an overhaul to the trade system. While it increased average profits from about 5% to 20%, it dramatically changed how supply and demand works, in addition to introducing price adjustments based on supply and demand. Now, once again, before 3.5.1, all supply and demand fully reset with each server tick. So, once again, if an outpost had 50 SCU of Agresium and a player bought it all, that player could wait for the next server tick to buy another 50 Agresium. With 3.5.1 and beyond, CIG introduced a refresh rate. Instead of fully refreshing supply and demand, each was refreshed by a certain amount, up to a maximum cap. So if an outpost had 50 SCU of Agresium for sale, a player who buys it all might see only 10 SCU of Agresium added to the outpost with each refresh tick. The refresh tick also takes into account the amount of a commodity purchased and subtracts that from the refresh across other servers. So if it refreshes for 10 SCU, but a total of 6 SCU was purchased during that tick's time on multiple servers, there would be 4 SCU added to the refresh amount for all servers. Now, too much cargo purchased can even sometimes lower the stock level or empty it entirely for the next refresh tick. When this was first introduced, the economies were region locked. So there were different trade economies between USA, Europe, and Australia. Now this update put a new focus on trading for a lot of players and made it profitable and competitive to trade, with the economy becoming more and more dynamic. For example, the introduction of the Carrack heavily disrupted titanium and astatine in 3.8.2, forcing a lot of traders to seek alternative routes. It was an interesting time to trade due to how volatile prices were. Now, before we proceed, I'm sure a lot of you remember 3.9.1, when Laranite and others were infinite. Somehow, CIG went back to the 3.5 economy system, but with 3.6 profits, giving us a best of both worlds situation. I know a lot of people enjoyed it, and many deride it and use it as an example to insult traders, but this was a fluke. It only lasted a month. However, with CIG's lack of communication on trade in general over the past ever, it's confusing to see why they left it in for so long or continued to refuse to acknowledge any sort of adjustments to trade. Now, things began to change for the worse around 3.10. The economy went back to its updated model. However, 3.11 saw the trade economy unified between all servers. So, instead of the three regions having their own economies, they were melded into one. While this is what is intended for the final product, CIG failed to increase numbers to account for three economies being shoved into the size of one. Europe alone was one of the worst regions to trade in due to its massive player base, and adding two other regions all competing for the same stock suffocated a lot of traders. Now, potentially tripling the amount of traders without increasing total stock or refresh rate shuttered a lot of the trade economy. However, trade was still slightly doable. Patch 3.12 changed all of that. Three major changes occurred that sunk the economy to where it is today. The first change was the new refining system introduced for mining in 3.12. With refining introduced, miners can now refine their ore from the raw version into the refined version that traders buy from outposts, making it identical to the store-bought versions. Star Citizen's trade economy heavily focuses on bringing materials to port cities, such as Lorville and Area 18. What this means is suddenly a new gameplay loop is bringing in high-value commodities such as Agricium and Laranite into the trade loop that an already struggling economy is attempting to work with. To make matters worse, CIG neglected to increase demand caps or refresh rates to account for the sudden increase in commodities being sold by miners, impacting both miners and traders. The second issue is the removal and restructuring of where things are sold. With the refinery update, metals and minerals can only be sold to Lorville, Area 18, and New Babbage, with scrapyards taking tiny amounts. Port Olisar no longer buys any metal or mineral commodities. This problem was further compounded with the removal of Levski for Xenothreat, giving us even fewer options for other commodities to be sold too. Port Olisar was a risky, but popular choice for traders looking to unload and get back in the air quickly, balancing its attractive turnaround with a fairly unprotected airspace. Orison didn't help matters, as its demands are an exact copy of Olisar, meaning that there is a massive port city that doesn't take over half the commodities in the trade economy. Good job, CIG. The third change took a bit of time to catch, and that's the issue of commodities and demands for those commodities deleting themselves. This has probably been a thing for quite some time, but became more apparent in 3.12. Let's go over that process. When a server comes online, each commodity at each outpost has a set amount that it spawns with before updating to the shared economy. Of those commodities, about 95% are set to spawn anywhere from 30% full to 0% full. For example, medical supplies on Hicks spawns with 0 stock. Gold at Kudra Ore is set to spawn with about 12%. Now, this would be fine to deal with, as traders would rarely see these numbers. However, when the shared economy updates, it treats this new server's low stock as a purchase, and subtracts it from the shared economy before pushing those numbers out. Now, this is devastating. So anytime a server has a 30k, a new one comes online due to overflow, or anything else that could spawn a new server, commodities and demand for those commodities get wiped out. This would be fine if we were still on the regional system, splitting the new servers between the regions. However, since we are now on a unified server system, whenever there is a new server, it wipes it out across the globe. This means that there will never be full stock for anything. Now, while not being full is fine, the way prices work makes this bad. For each economy refresh or tick that a commodity is not at full stock, it increases its price up to a maximum. Prices only begin to lower when a commodity has set at full stock for several ticks. Same goes for demand. So with servers repeatedly wiping stock, prices will continue to rise until hitting their maximum cap. This also lowers the price trade hubs will buy most commodities at. This is why the price of trash commodities such as barrel are consistently high. No one's buying it, it just keeps eating itself. So let's recap, because I ramble. Star Citizen had a total of 5 major ports to sell commodities to. 3.12 removed 2 of those 5 locations and introduced refinery gameplay that folds into trading, making miners and traders compete for demand. At the same time, CIG failed to increase demand or demand refreshes after rolling all regional economies together. The economy has become Ouroboros and continues to eat itself, and none of this has been addressed since 3.12. CIG couldn't even bother to adjust Orison to purchase metals and minerals. Not to mention the Trade Journal, which was touted by many to be the next big update for trade, didn't work out. While it was great during Invictus, it was clearly forgotten about. It only updates for processed food and distilled spirits. Spirits are never in stock due to the Ouroboros economy, and processed food is so bad that a C2 can make the same money in 5 minutes doing comrade missions than it could hauling food, making it a useless commodity for anything else. As a side note, the journal is also rarely accurate and does not show how much of a commodity a location needs. It may advertise that an R&R will pay full price for distilled spirits, but neglect to tell you that it only wants so many SCU. You arrive with a shipload and find you can only unload a portion, even if you're the first person there. You get the idea. Now, a lot of people like to argue that trading was intentionally nerfed so people would test other things. There's a few counterpoints to this. One, the patch that killed trade forced miners to participate in the trade loop via refining. It doesn't make sense to introduce a new gameplay option that is forced to fold into the loop that they just killed so people would test the new gameplay mechanic. 2, while ZIG loves to occasionally talk about quantum and quanta, they tend to focus on how the model works itself, rather than talking about the trade or economic portion. Tony Z's video on Quantum spent more time talking about an NPC drinking in a bar than it did on the trade economy, which is to say, it didn't. 3, CIG are often unaware of what's going on in their own trade economy. The Infinite Layer Night of 3.9.1 happened the night after a back-end maintenance session. It took them a solid month to correct it, which they did on the back-end without introducing a new patch. So they can adjust the economy whenever there's an issue, they're just usually unaware that there is an issue. 4, CIG staff are on video saying that while the economy won't receive major updates until Quantum comes online, they would do minor fixes if it needed it. However, I feel like this video is proof that those words were empty. 5. Trade has the secondary effect of increasing piracy and escort operations, which adds to the combat gameplay that has been touted for 3.14. Asymmetrical combat for freighters versus fighters is a lot less than the current fighter versus fighter that is seen in the PU. Aside from tests done for the sake of testing, very rarely will you see a crewed C2 or Caterpillar being ambushed and attacked by pirates. Combat and related data can deviate drastically when done organically. Now, is this all doom and gloom? Not exactly. Star Citizen is in perpetual development and will be for several years. The hopefully soon introduction of the Hull C will need to bring about massive changes to the economy, which will hopefully debut alongside Quantum. While this is currently slated for 3.17, I'm not holding my breath. However, the Hull C will mean an economic shift toward station-to-station trading, which would lead to large profits for bulk haulers, while commodities on the ground would lead to higher margins for smaller freighters, allowing them to stay comparable to large ships, similar to Elite Dangerous, which has proven to be an effective model. However, that's all in the future. If CIG would like to make things easier for traders until that future arrives is entirely up to them. The Hull C has disappeared and reappeared on the roadmap multiple times, and a massive update like Quantum could pull the same trick. In my opinion, if CIG would like to earn themselves a lot of goodwill from players, they could simply increase the initial stock spawn for most things to about, 72%. This would help alleviate a lot of stock and price issues without causing another 3.9.1. At the very least, it would be a band-aid for the economy until its overhaul. And that's it. The history of trade, the trouble with trading, and hopefully an improvement in the near future. That's all for now. I hope you've enjoyed this, or at least learned something. Until next time, keep on trucking.